So the actual effect on market fundamentals right now is actually very limited. What it has done is it has spooked the market in terms of wondering what further disruptions there could be to Russian supplies going forward, or indeed what disruptions there could be to other pipeline infrastructure that supplies Europe. Simultaneously with the explosions, there were reports by the Norwegian Petroleum Safety Authority of unidentified drones around Norwegian infrastructure, which causes concern about any risks of a spillover of the Ukraine-Russia conflict into damaging European import infrastructure from other locations. We, of course, still have some gas flowing through Ukraine and some gas flowing through Turk Stream and into the Balkans for European supply. And that is additional supply that could be lost as tensions between the EU and Russia escalate. So this is fed into a cycle of concern about further disruptions to aggregate Russian supply. And in terms of the disruptions, there is a lot of pointing potentially over the coming weeks as to who's responsible for those. It does look like an act of sabotage, and this is how the authorities around the region, both in Denmark, Sweden, and Germany, are perceiving that. It is also interesting that it has affected three of four pipelines, which actually comprise the Nord Stream 1 and Nord Stream 2 projects, with one of the Nord Stream 2 pipelines potentially unaffected. Now, as tensions grow and the European energy crisis continues, there is also a concern potentially that this could still be used as leverage by Russia in terms of offering supply up through this remaining pipeline if it is indeed still operational. When we're talking about the trading of the wholesale gas market and the wholesale power market, there is a lot of policy risk. So it's very difficult for the market itself to take firm positions, knowing that in the background, some EU member states are talking about imposing a regulatory price cap on the market, basically meaning that you can't trade above a certain level, which is a very market distortionary thing to happen. That could cause problems in terms of Europe being able to attract LNG cargoes into Europe ahead of Asia. It could dissuade some other pipeline exporters from exporting some gas to Europe. So a lot of tensions about how the wholesale market will continue to function. But the other thing to note is that we just have such a dearth of supply relative to what would be normal demand, that the way that we're pricing in the wholesale market and the way that this is translating into tariffs paid by homes and industry is by needing to price high enough to generate demand destruction. And that just means really high prices to continue. And we just do not have other supply options in the short run that are going to alleviate this situation. So everything depends on reducing demand. Now we have to wait really until the middle of the decade for the next raft of US liquefaction projects and those in Qatar to get going in order to provide a big global supply boost. Because in the interim, Russia can't divert this gas to other markets. This is no reconfiguration of the global system. All the gas that Russia is not sending to Europe is not going anywhere else. It's just being shut in terms of upstream production. So the global market looks very tight. And the dynamic where Europe has to outbid Asia and the rest of the world for LNG cargoes looks like it's going to persist over the coming few years.